All right, hi everybody. Ryan back here again. Sorry for the delay on this one, guys. I know I was going to try to get this out last week or the week before. I don't know. I did my taxes on May 14th. I think it was a Friday. Finally got them done. I'm a procrastinator. I throw all my receipts in like banker's boxes and farm stuff and trucking stuff and everything else, and it just seems easier throughout the year that way, but then it takes an entire day to sort through everything, add everything up the way that the IRS sorts everything out as far as expenses and all that good stuff. Then my wife is one that, like, whenever there's like a $50 or $100 promotion to open a bank account here, she jumps on it. The next thing I know, I've got 20 1099 interest forms to put in, like for $5 or $50, and it's a drag. So I just despise doing it. So I always wait till the last minute. So like I said, I was gonna try to get this out sooner, but it been really busy with the farm stuff. If you guys watch that channel, we've had really good weather. We got more chickens in, and so it just when the weather's good, I get tied up in all that stuff. So I want to talk about our 2020 final numbers right off of my Schedule C here. So I'm a sole proprietorship, or LLC, which the IRS classifies you as a disregarded entity. So basically you can just file a Schedule C with those earnings and losses and expenses, whatever you have, right along with your 1040 form. So it's pretty simple. It keeps my costs down as far as tax prep and all that. So yeah, it's and like if you're using somebody like ATBS is one of them out there. If you're in the same organized the same way that I am as a sole proprietor LLC, like if you're sending them all your receipts and everything, they'll actually generate the Schedule C for you that you can take to if you do your taxes yourself, or if you go to an accountant, whoever you go to, or H&R Block, whoever people go to out there. So I use TurboTax Live. I do it all myself, and then I actually had a tax attorney that actually reviewed everything and said, yeah, you're good to go. So you get kind of one final set of eyes on it, just if anything pops out, on top of the kind of the electronic AI type of screening it does. So it's not too expensive. I think I get about $275 a year is what I get charged to do, a personal tax, the Schedule C for the trucking business, Schedule F for the farming, and then everything else that's in there. So not too bad. So if I was going to an accountant, it'd probably be 500 to 1,000. But it's a lot of work. I mean, going through receipts and all that, and adding everything, it's can be daunting. So anyway, so 2020, pretty good year. As you guys know, if you guys have followed me, I don't really work a whole lot. I was probably, I mean, by my per diem deduction as far as days, I think I was out like 120 nights or something. So and that's night. Like I said, that's when you stay over the night. So I think I probably only worked technically worked 6 or 7 months. So I was probably home almost 5 or 6 months, where I wasn't working. So I only worked about half the year roughly. So our 1099 was $157,072. Yeah, anyways, so roughly, like I said, 21 and something and some change from Mercer, and like 135-ish from, like I said, this is the total of both of those from Landstar. So expense, I didn't put every single expense on here, but I kind of put the highlights. Fuel, I spent $37,279 on fuel. Oil from my oil changes. You guys know, obviously, if you watch me, I do all that stuff myself. So none of this is labor except for tires. Everything else is just basically parts. And obviously, I can't get a deduction from my own time, because then they would look at that as a gain. So you can't deduct your own labor time as far as the IRS goes. So oil changes, doing it myself over the year, spent $1,340. Tires was at $7,180, and that was actually, I had 2 sets of steers on that year. The way that it kind of worked out. So because I only run my steers about 100,000 miles. So and plus I had one. I had a drive tire on my old set of drives that I had before I put these Bridgestones on that actually I had to have replaced, and it was like I got a used tire and somehow it turned into being like $500. I should have just had them put a new one on. So like I said, almost $7,200 on tires this year, and that's not typical. Like I said, I put almost $4,000 in drive tires on, and I believe I had two sets of, this worked out to where I had two sets of steers in 1 year. Repairs and parts, everything you guys watch on my videos, everything that I did this year, this is basically parts, because like I said, I'm not paying for labor. I don't think I paid for labor anywhere other than on tires. And that was $13,562. Insurance, and this is all my insurances. This is my comp collision on the truck, contractor protection program, which is like your workman's comp if you get it through Landstar, and my bobtail insurance and all that through Landstar, which I actually just switched my bobtail insurance to First Guard because Landstar Gallagher, they jacked their prices up by like over 30% for some reason. So is that $4,972 for all insurances that I have to pay to be in business, so almost $5,000. Plates and permits was at $2,100. And the other thing, the per diem, as far as I know, if you're on a W-2, you don't get to claim the per diem anymore. You have to be on a 1099. I mean, somebody correct me if I'm wrong, but that's what I'm hearing from other drivers. I haven't looked into it too closely. So per diem, it's a daily rate, and I believe this year it changes from time to time. I believe this year it was $62 per day that you're out. And like I said, I think it was I don't have the exact, it's in my logs upstairs, I don't have the exact number. I think it was like 120 days. And you get 80% of that. So it was like 9,900, I think, is what the total number was. Then 80% was 7,920. So that gets knocked off of this. It goes in your expense basket there, and gets knocked off of this this total 1099 income. But it's not, you didn't really spend. I mean, yeah, you may have if you're spending that much on food and everything. So it's kind of a little bonus that you get where you're claiming a little bit more. I mean, you can do actual deduction, but then you're gonna have to save receipts for every meal and grocery and everything else you bought. And I don't know, you might come out better that way, but this way is just easier just on the approved daily rate for DOT workers. Then it's 80% of that actual rate. I don't know why they just don't make, this is the rate, but this to complicate things more, they give you the 62 or whatever dollars a day, then you got to add up all the days and then times it by 0.80, 80% of it, and that's how you get that number, which I think, why don't we just make it a simple number? But anyways, so with all that and other little expenses, I had like my phone service and all that, phone and internet and all that stuff was like $839 for the year, and my that's also my communications on my ELD. That's like $24 a month, roughly, give or take, for what I pay. So that's deductible. Like I said, I'm just kind of going off the Schedule C here. Taxes and licenses. The other thing, like if you pay additional IFTA tax out of your settlement, like if you're paying 50, 60 bucks a month or whatever that, wasn't captured with on your fuel when you bought your fuel, that's a tax, that's deductible as well. Then obviously, then you're gonna have your lease payment. If you have a lease payment, it's depending on what type of lease it is. Like if it's a track lease, it's like that's what Snyder does, SFI does, track leases, where they're closed. Basically, I'm probably gonna screw this up, but they're closed. There's no, when you pay the payment, when you pay the final payment, you don't own the truck. You have to pay at least $1 or something. I mean, you have to have an set amount to purchase that vehicle after the lease. But if you're into a lease with where, okay, you pay the last payment and you own it, those are a little bit trickier as far as doing 100% write-off like a lease. And if you finance your truck through a dealer or something, or a Volvo credit or PACCAR credit or whoever, or your bank, and you actually own the truck, the title is in your name, then you'll do a depreciation schedule, and that kind of depends on how you want to do it. So I know, like on my farm side, I bought a brand new that 1835M Massey Ferguson this year. I paid like $27,500 for it, $27,500. And since I actually made, I didn't write it on here. I should. So my total profit or net profit from trucking after all expenses, which if you've taken this number, subtract this number from this number, you'll get this, was, I'm probably going to knock this thing off here, 54, 139. So $54,139 is what I made after all expenses, and that's what's taxable, is that number right there. And like I said, if you add this per diem back in almost 8 grand, it really kind of puts me up in the mid 60s there. So that'd be 60, I can't think, 62, 63,000 basically. And I don't really, I didn't really work a whole lot, you know, so it's pretty good money for only working about 6 months of the year, you know, 6, 7 months of the year. So, and like I said, this would be the amount that you pay taxes on, or how you get, I mean, and then there's your standard deduction. And I'm not going to get into this whole tax thing because I'm going to I'll say something to be screwed up and I'll get eaten alive in the comments and all that. So, which I appreciate helpful information and all that, but I'm not an expert on different, you know, organizations. Like there's S Corps out there, there's LLCs. And then if you hire a driver and you're paying them a W-2, then it gets even more complicated, because then you actually have to, you can't do a Schedule C. You have to actually file as a corporation. So it gets trickier, than you're subject to corporate tax rate and all that. So this way is just a lot simpler. So yeah. But anyways, as I was going with that tractor, so with my farm stuff, I ended up having, I took a 100% write-off on that tractor. So that took 27,500 right off of this number, which put me down to where we actually, with my wife paying in W-2 and all that, and I had actually had like $53,000 of total farm write-offs with all the equipment and seed and fertilizer and everything else that we did. And we're really not generating a profit yet on that, so it's been kind of a building stage, so that kind of helps offset taxes on the trucking for now. Anyways, like I said, I was getting at depreciation. Somehow got silent on that tractor thing. Yeah, so if you buy a new truck, I mean, you could do like a 5-year, whatever the useful life is. There's several different ways to do depreciation. That's something you'll have to look into the tax code. I mean, or whoever your tax advisor is, as far as how you want to do that. Because like if you make a lot of money, then you may want to do a 100% write-off on a truck or another piece of equipment or something like that. So there's a lot of different ways to move things around. But the negative side of having a whole bunch of write-offs is that it make on your tax returns when you're self-employed. They want your tax returns, bank statements, profit and loss statements, and all that. And so I've got a Schedule C and a Schedule F, and I made $54,000 on this one, and I had a $53,000 loss on the Schedule F in there. Then it makes it look like I only made $1,000 for the year, when actually that's not really the case, because it's just the way our tax system's set up, that you know, you can depreciate that whole machine, depreciate all your other equipment and all that. But like I said, if you're going to go in and try to buy a house or something and being self-employed, you can kind of shoot yourself in the foot, because they're okay, and they don't care. They know the whole system. Okay, yeah, you didn't actually lose that much, but it's depreciation on a piece of equipment. But that AGI on there still says what it says. So, and it's kind of tricky to argue with them about that. Like, that's not really the quote unquote true picture. So, but anyways, like I said, just thought I would share this with you guys, and I just thought we was kind of going to go into, you know, would you go into trucking in 2021, which we're already almost halfway through now, so I'm kind of late getting this out there. I know the rates at Landstar anyways have been pretty strong. I mean, really strong. I mean, most stuff that I've been doing, you know, even long haul stuff, last long haul stuff that I was doing is, you know, in the high $2, low $3, sometimes even more per mile. And that's of course, the gross rate, the Landstar rate before the 65%. So that puts you down around, you know, $2 and higher for the most part to the truck. Fuel's going up, fuel's getting pretty high. I mean, gas here in Northeast Ohio today, what is today, May 24th or 25th here. And I mean, gas is at $3 now a gallon. Diesel fuel's quite a bit more, is over three and a quarter. So that's going to put, if you got a less efficient truck like I do, it's going to put a lot of pressure on your profits here. As you can see, that this fuel is your biggest expense, as you can see out of all this stuff here, other than if you got a really high truck payment. I mean, if you got a $3,000 a month truck payment, then obviously your truck payment will be about the same, but with a newer truck, you might get that fuel number drop down a little bit as well, so that's something to look at. But again, I did a video earlier about the inflation and all that. We've seen it everywhere, basically. I think it's inflation driven and shortage driven. It's a lot of places, like I said, I deal with the farm stuff and parts and all that. It's been kind of there's been issues getting parts for things that shouldn't have been an issue. So I think with the shortages and then all the money that's been pumped into the system, that's why I think I recommend, owner-operator trucking. As things go up, the rates are going to go up. As fuel goes up, fuel surcharges go up, freight rates go up. So you can kind of ride the wave with whatever happens in the future. So, and as you guys know, trucking is a cyclical industry. Stuff's always changing. Different times of the year it changes. Stuff's moving different places, different times of the year, and all that good stuff. So, I use my tax return over a year to kind of guide make decisions on. Like I said, if you're tracking stuff every week, oh, I didn't make any money this week, or you're tracking it monthly, there's just bad months and bad weeks. So you really need to look at this as a year. What you look at, like if you're going to get into it or get out of it, or what are you going to do? You really need to sit down and look at it over the year, because like I said, there's slow months, and like I said, the lead up to the Christmas holiday and all that, there's a lot more freight moving, stuff flying off the shelves in stores and all that. And even during the initial COVID stuff back in, things kind of slowed down in May. I was really busy there in March and April. It was really busy. Then it slowed down. I stayed home. The rates dropped really low. I stayed home for 2 weeks. Just, I'm not going to run for $1 a mile and stuff like that. And then it's like after about the mid to end of May, everything's been picking up and has been pretty steady since then. I've been doing a lot of short haul stuff lately, or have been. And most of the stuff I've been doing has been $5, $4 or $5 a mile plus on regional stuff here in Ohio, Indiana, Pennsylvania, and Western PA. West Virginia, this kind of area up here. It's been pretty good money. It's not been very hard. I can go out and run out and do a 1-day run or an overnight run, and after all expenses, I've done $1,000, $1,500 for basically 24 hours for the most part, and some going down Indianapolis and back and I can do it in a day. So, and that's really, I haven't been doing a whole lot. I've been just doing, one or two loads a week. So I've been trying to get my maintenance business set up and all that. So which will be more to follow on that. So again, I just thought I would share this all with you. And, I think it is a good time to get into the business. The rates are still strong, but you never know. They could all collapse tomorrow. But as far as what I did last year for the amount that I worked, I think it's pretty good money. So, and that's, like I said, straight off the 1099, or the Schedule C. So I always like to show everything on here. I've blocked out my Social Security and EIN and all that on here. So that was everything that's on here. So that's pretty much it, guys. Thanks for watching. Subscribe if you haven't already. Hit the bell for the updates. Like the video. Comment. I know we're always behind on the comments and stuff. My wife's always on me, but we've been really busy like the last 2 weeks here to get caught up on questions and all that. But I know a lot of the other members of the community, they answer a lot of questions too, and put their input in, and we appreciate that. So again, like I said, if you're new, subscribe if you haven't already. And if you guys are interested in the farm stuff, we moved that over to the other channel. We always put a link to that channel as well if you're interested in farming, antique tractors, working on stuff, and any other little projects. Actually just shot another video this morning. I'm trying to buy a piece of abandoned railroad property from CSX, so I just did something on that if you're interested in that type of stuff as well. So it had to be on the farm channel. So again, thanks for watching. Thanks for all the support, guys. We'll see you next time.